Greetings, my dear students. It is Balakrishna again from BALAS Accountancy Special Classes. Welcome to my 40th episode. How the net profit would be ascertained by a businessman not well versed with the double entry system of accounting was discussed in my last two episodes. That is episode number BSE 038 and BSE 039. By using the first method, that is statement of affairs method, in other words, net worth method, the net profit will be ascertained under the single entry system of bookkeeping, okay, which is otherwise called account from incomplete records. However, this method does not provide a clear picture of the operational results of a business. It does not give information about sales, purchases, gross profit, operating expenses, etc. of the business. As a result, a meaningful analysis of the financial statements cannot be done, nor effective steps can be taken to improve the financial portion of the business. I repeat, as a result, a meaningful analysis of the financial statements cannot be done, nor effective steps can be taken to improve the financial position of the business. Hence, you will find that this method lacks adequate accounting information, and the profit disclosed by the system is not gladly accepted by the revenue authority. For better management of the business, avoiding harassment by the revenue authority, and facing challenge of the competitors in a scientific manner, sometimes a trader may adopt the double entry system of giving up the single entry system. Therefore, this method of collecting information as per the requirement of the double entry system of bookkeeping is termed conversion method. I repeat, method of collecting information as per the requirement of the double entry system of bookkeeping is termed conversion method. The conversion of single entry into double entry in actual practice, I repeat, in actual practice, will be done by preparing the following: opening statement of affairs, cash book, subsidiary books, and certain other accounts. There may be certain other transactions too, of which no record is kept in the books. All such transactions must be journalized and posted. And eventually, after preparing a trial balance with the help of ledger balances, final accounts is prepared. Well, students, this is in actual practice. Okay. However, you will observe that this is a very lengthy process and therefore not advisable from exam point of view. Usually, a bridged conversion method is followed. I repeat, a bridged conversion method is followed. Under this method, nominal accounts are not opened in the ledger. Keep it in mind, nominal accounts are not opened in the ledger, which is otherwise a must in case you go for the actual practice. Okay. Nor a trial balance is prepared. That is a must otherwise. Only such information is collected, which is required for preparing the trading and profit and loss account and balance sheet of the business. This way of collecting information as per the requirement of the double entry system of bookkeeping is termed conversion method. I repeat, as per the requirement of the double entry system of bookkeeping, the way of collecting information is termed conversion method. Calculation of missing figures is the main technique here. We will be able to get these missing figures by preparing certain accounts. And as such, a student is supposed to be very familiar with those usual items which appear in the debit and credit side of various ledger accounts, such as cash book, total debtors account, total creditors account, and opening statement of affairs. In normal cases, these 4 items should suffice your requirement. Mostly this will suffice. Okay. At least these 4 are the base side accounts you may have to prepare, right? In this way, one will be able to arrive at or calculate a missing figure from a ledger which in turn will help him to finalize his accounts, or in other words, prepare trading, profit and loss account and balance sheet. In my sharing section of this video, I'll be giving you those usual items that appear in various ledgers. Okay, most of the ledgers are this one, right? Please observe those items and practice as many sums as possible, so that each missing item will strike you very fast and you will be able to confidently close the relevant ledger also. In this way, you will nicely get used to how to approach a conversion method sum. Well, as usual, let me switch over to my sharing section. And I am working out one practical sum also here, so that you will be able to get settled with this conversion method nicely. Thank you. Well, students, before starting the practical sum of the day, let me explain to you the implication of calculation of missing figure. A very predominant thing in this method, conversion. Generally, the following accounts are prepared in order to trace the missing items. Number one, preparation of opening statement of affairs. Well, my students, you are an expert by this time. In the net worth method, you have done several statement of affairs. So on the opening day, you find out the various assets and liabilities, list it down and get the capital as the difference. Okay, fine. That's over. Now, preparation of cash book. A summary of the cash book must be prepared by writing the receipts on the debit side and payment on the credit side. Purpose: to ascertain the missing figure of cash or bank balance at the beginning or end of the year, as the case may be. However, in certain cases, it also helps to locate any missing item of receipt or payment from the cash account or bank account. Preparation of total debtors account. Purpose: depending on the case, to ascertain any of the following items: credit sales, opening debtors, closing debtors, cash received from debtors. One of the items you will find missing, by resorting to opening the total debtors account, you will get it, and it will serve your purpose. Right. Similarly, preparation of total creditors account. Purpose: depending on the case, to ascertain any of the following items: credit purchase, opening creditors, closing creditors, cash paid to creditors. Okay. In case you have to confront with some advance sums, you may have to prepare the bill receivable account, bills payable account extra also. Bill receivable account is prepared in tandem with total debtors account, while bills payable account is prepared in tandem with total creditors account. Well, preparation of bill receivable account. Purpose: depending on the case, to ascertain any of the following items: opening balance of bill receivable account, bill receivable received, because the journal entry will be BR2, total debtors account. Amount realized on bill receivable discounted and discount charges thereon. The journal entry will be cash book account debtor, discount charges account debtor to bill receivable. Okay. Then amount received from sundry debtors on honoring the bill. Cash book account debtor to bill receivable. You have given away the bill and you have got the money into the bank. Bill receivable dishonored, opposite of this one. The entry will be total debtors account debtor to bill receivable account. Bill received endorsed in favor of creditors. Instead of discounting, you are endorsed to somebody. The entry will be total creditors account debtor to bills receivable. And of course, closing balance of bill receivable account. Any of this information you may have to obtain and suitably use to finalize the account. Okay. Now, preparation of bills payable account. This, of course, as I already mentioned, is prepared in tandem with total creditors account. Purpose. Depending on the case, to ascertain any of the following items. Opening balance of bills payable account, bills payable issued. The journal entry will be total creditors account data to bills payable account. Amount paid to sundry creditors or honoring the bill. Bills payable to cash book. A payment is made. Bills payable dishonored. Opposite of this account. Okay. Bills payable account debtor to total creditors account. And of course, closing balance of bills payable account. So one among this will be useful to you. Okay. Then only you will be able to finalize the accounts. Then some equations subsist in a trading account. Opening stock plus net purchase and direct expenses minus closing stock is the cost of the goods sold. That's what a trading account explains. Okay. You can transpose any of this one and get the required item. You may have to get the opening stock someday, you may have to get the closing stock someday, like that. Okay. Then yet another equation is there. Net sales minus cost of the goods sold is gross profit. Here also you can transpose and get the relevant item so that we can satisfactorily prepare a trading account. Well, that's all. Now let me take up the scheduled practical sum of the day. Thank you. Well, friends, the practical question of the day is question number 34, page number 23.58, DK Goel, edition year 2019. It's as follows. A retail trader did not keep his books on the double entry system. Following balances were obtained from his books, particularly opening 1st April 2013 and year end 31st March 2014. Various assets and liabilities, the opening figures as well as the closing figures we have been given. Further details. Following further details of the transaction for the year ended 31st March 2014 are available from his incomplete records. Sales, including cash sales, and purchase, also including cash purchases, salaries, drawings, rent, taxes, and insurance, bad debts written off. You are required to prepare his trading profit and loss account and balance sheet after considering the following. Rupees 1,500 outstanding salaries, insurance prepaid 800, goods worth rupees 2,000 were used by the proprietor for personal use, that is drawings, and answer hints to have been given. Well, let us proceed like this. All the side accounts means sundry debtors, sundry creditors, cash account. These three, let us operate now. We will open these accounts and operate it in tandem. Okay. All available information, we are going to place it there. Cash book opening balance is 6,000. I've shown it there, right? Total debtors opening balance is 32,000. Okay. And creditors opening balance is 20,300. So opening figures have been shown. And let's see, wherever closing figures are there, we'll place it as it is. Debtors closing figures 38,800, creditors 24,600. Okay, so that also has been shown properly. Okay, and this techniques you keep it in mind. An account's opening balance comes in one side, means diagonally opposite has to be its closing balance. This will help you when in future you will be doing a lot of side accounts, especially for your cash flow statement and other things. Okay. An account's opening balance comes in one side, means diagonally opposite will be its closing balance. Here also see, here and here. These techniques will help you, right? Now let us place all other information available on the body of these accounts, right? Sales, including cash sales, 62,000. So cash part, okay, 62,000. Sales, cash sales 62,000. Now, again, purchases, including cash purchase. So cash part, 25,000. Payment by purchases, cash purchase, 25,000. Okay. Now, that being the case, the difference of amount is the credit transactions, credit sales as well as credit purchase. Okay. Total debt is to sales, credit sales, the difference 1,20,000 minus the 62,000, that is 58,000. Similarly, creditors 72,000 minus this 25,000 cash, that is 47,000. So this information, and this information available, right? So what's the difference all about? Actually, creditors means we must have paid to the creditors. That's why the difference in the debit side, creditors to cash, that is 42,700. And this account stands closed now. And this, of course, will move to the cash. Correspondingly, it has to be shown here by payment to creditors 42,700. Similarly, debtors, we are closing it. We find in this side 48,800 a gap. What is it? We have received the money from the debtors 48,800, and now the account is self-standard, and that will in turn move here. Okay, fine. So total debtors account we are closed, total creditors account we are closed, and the information thereon moved to correspondingly cash book also. Now other information, whatever is available pertaining to cash, let us take it. Salaries, drawing, rent, and tax insurance. These three figures, 16,500, 8,500, and 7,100, I am showing here. Okay, in the cash book. 500, 7,100. 16,500, 8,500, 7,100. Okay. Right. Now, so this is clear to you, this is clear to you, this is clear to you, all this up to here, it is clear. My students, you should be vigilant with the each and every fixed assets. Office equipment 8,000 begin, year end also 8,000. Obviously, no purchase. Whereas machinery 30,000 has become 40,000. Naturally, we have purchased. Because had it come down, what you would have done? Let's say it was 28,000. You could have made two assumptions, unless they have mentioned something. One is depreciation, otherwise, sale of the asset. Anyway, they'll guide you in that case. Here it is a clear purchase 10,000. So there has been a payment of 10,000 for purchasing machinery. That also comes in the cash book 10,000. Now, cash book we find there's a closing balance of 7,000 by way of difference. Okay, this side all the figures, but for the 7,000, we got everything. So 7,000 is the closing balance. That's what, in fact, they also want here. What is the closing balance? We have got that also. Okay. Total debtors account closed. Each item has been explained to you. Creditors account also closed. Each item has been explained to you. Now I need my opening capital. For that, of course, you are an expert by this time. In the network method, n number of opening statement of affairs we have prepared. Similarly, opening balance sheet we are preparing here, showing all the assets and liabilities respectively in the asset side as well as the liability side. And the difference is my capital, opening capital. Now let's check how far the information is correct, whatever we have taken with the answer hints. These are the cash received from debtors 48,800 correct only. Cash paid to creditors 42,700. That too is correct only. Okay. Closing cash rupees 7,000 correct. And opening capital 77,700. So far, so fine. Okay. Now, let us prepare the final accounts. Final accounts, first trading account. You know, the structure of a trading account. You are an expert by this time. Opening stock, 22,000. Okay. I'm showing the opening stock 22,000 there. Right. purchases. So we need to take here only the full amount. Okay. Purchase means cash plus credit. That's all required only for preparing the account. Here we need the full purchase. Similarly, full sales. So 72,000 and 1,20,000. 72,000 and 1,20,000. However, we have been told that goods worth rupees 2,000 were used by the proprietor. This is for personal use. So less drawings. So this is the effective purchase for trading purpose, 70,000. And closing stock. Closing stock, of course, they are given here, 28,000. And the difference is gross profit, which I am bringing here. Now, other nominal accounts. Let's go back. Salaries 16,500. Okay. However, there is outstanding 1,500. So total 18,000. Rent, rates and taxes and insurance 7,100. However, we are told that insurance was unexpaid or prepaid insurance 800. Okay, so that we have reduced the net figure we are showing. And when we took all these items, we never considered this bad debt because it is a non-cash item. It had nothing to do with the cash payment or cash receipt. It is a bad debt written off 2,400. Okay, so that is also nominal account to be taken into the profit and loss account. Is it no? So that also are taken. And the difference is 29,300 net profit. Let us check this one, 56,000 and 29,300. Yes, 56,000 and 29,300. Now balance sheet. Here it is balance sheet, not final statement of affairs, because it's a converted, proper double entry system. Creditors, based on your ledger itself. What is the closing balance? 24,600. Show it here. Outstanding salary. Okay. I know that each adjustment has to come two places. The basic technique of preparing a final account. So 1,500 outstanding salary. Okay. 1,500. Capital. Opening 77,700. And net profit 29,300 gets added 1,07,000 minus drawings 10,500. How is it 10,500? Cash drawing 8,500 plus goods taken home. That is also drawing. So together it comes. Okay, 10,500. So net amount is 96,500. That is my closing capital. And moving to asset side, cash in hand. Okay, let's check the account. 7,000. Okay, show 7,000. Debtors. What is the closing balance of debtors? 38,800. Okay, show it 38,800. There is no provision, nothing. Then you may ask, what about the bad debts? Bad debts written off. Having written off subsequently, only they have got this one. Okay, they never said bad debts to be written off, right? Yes. Now, next stock. What has been my closing stock? 28,000. Yes. Prepaid insurance. You know that prepaid insurance is there to the extent of 800. That's also asset. And other fixed assets. What has been fixed assets? 8,000 and 40,000. They are not mentioned about any depreciation, nothing like that. So as it is, I am showing the figures here. The total up both the sides, we get 1,22,600 each. Okay, let's check. The answer hints 1,22,600. So that's all, right? This is the first sum I have done for you as far as the conversion method is concerned. It can be much more complicated. Gradually, tough and tougher one will take it. Okay. Well, students, so we have taken up today the conversion method. Second method under single entry system. Okay. I explained to you the various techniques, how to go about, etc. And also one full-fledged sum also we have worked out. Hope things are clear to you. We'll be taking up more and more complex sums in the days ahead. Till then, take care of yourself. See you. Thank you.